get a lot of that. Yeah, so, yeah, like you said, either you're eating, so obviously people are eating lunch here at noon. And obviously, like us, like you said, usually we're eating in the car or eating on the run or something like that. So
Exactly.
we actually don't have the opportunity sometimes, but sometimes we do get an opportunity to actually sit down and enjoy your lunch.
Right.
Unless you're Wes, and Wes doesn't eat lunch until like 2:00 now. So
I feel like Ferris Bueller right now, though. Like I'm playing hooky, like wow, I'm out amongst the people.
Alrighty. Well, welcome to episode 12 of the Qierre Show. I'm your host, Realtor, and author of the Blueprint to Successfully Selling Your Home, Qierre McGlory, and now the productivity coach of Keller Williams North Tustin. Wow, it's a mouthful.
It is.
That is a mouthful.
Yeah.
Thank you guys all for all your warm wishes. Thank you for all your congratulations. Thank you for your calls, your texts, your comments, your emails, your DMs, your IMs, your smoke signals. Really appreciate it. Very excited for this new opportunity I get to have to mentor and coach new and newer agents, build viable business, real estate businesses, help them become accountable, provide them with the tools to be successful. So I'm very excited about this opportunity. And I also have to give a special shout out to my amazing, beautiful wife for making this awesome Angels bow tie. I'm sure you guys can see it. The Angels bow tie. I got to represent for my Angel fam.
Right.
The season's starting. We're going to our first game on next Friday, so that should be fun. Now, you guys probably recognize my special guest here. He's a regular. He's my business partner, my lender, Mr. Money Man himself, and Axiom Home Loan Sales Manager of Orange County, Mr. Wesley Oliver. How are you doing today, sir?
Excellent. How are you?
I am doing well, It's Friday. We're actually out at Center Street in Anaheim. A lot of cool restaurants here. Unfortunately, Wes can't eat until 2:00, so that's kind of annoying because my stomach's growling right now, but he can't eat until 2.
Right.
So anyway, we're just going to be sitting here and be tempted by everyone's good food. Got a Mexican restaurant here. You got people eating pho. It gets awesome. And he can eat until 2, and that kind of sucks. But
smells great, though.
It smells great, though. You can enjoy the smell of the food. We just can't partake in it until 2:00. Well,
right.
He can't. I don't know. I'm for sure I may go in there and get some tacos or something. They call my name. Those chicken tacos are good. So, yes. So if you guys saw the title of today's show, we're going to be talking about mortgage update and also giving a market update because things have changed.
They have changed dramatically.
Yeah, absolutely. So I'll let Wes take it from here. So, Wes, what have you been seeing? What's going on?
For starters, rates are great. They are the lowest they've been. We saw the largest one-week drop that we've seen in 10 years. So the effective rate for this week was somewhere around 4.06%.
4.06%?
Yeah, with just like a half point cost.
Oh, wow.
And they've updated the effective rate of what they think the effective rate is going to be for the entire year. Mm-hmm. So right now, that effective rate is like 4.5%. Now, if you guys remember, all last year when we were having these conversations,
right,
the estimate was going to be that rates were going to be about 5% by the end of 2019. Mm-hmm. So now they're saying the effective rate is going to be like 4.5%.
Wow,
which is actually lower than the effective rate for last year.
Mm-hmm.
The effective rate for last year was 4.6%. So, and then next year they're estimating it's going to be back up to like 4.8. Mm-hmm. But that's still not 5. So that's great news. Now it's a great time to buy a home. Now is a great time to refinance, and the market's going to start heating up as well because wages are still really good, and employment is still really good, right?
Yes.
So all of that is great news. And then one thing to keep an eye out for, there was an announcement that the Trump administration made this week.
Okay.
He actually signed into law. He wants Fannie and Freddie. He's ending the conservatorship of Fannie and Freddie. So those of you guys who don't know, Fannie Mae and Freddie Mac, those are government-supported enterprises. Mm-hmm. And back in 2008, when the market crashed and whatnot, conservatorship was created with Fannie and Freddie, which basically meant now you had direct government oversight with those particular entities.
Okay.
So President Trump, he signed to end that the other day, and he's telling them he wants them to make broad, sweeping reforms. It basically sounds like he wants them to make it easier for people to be able to borrow money to buy homes.
That sounds like a good thing.
Yeah,
right?
It's a good thing. So yes. we'll see what the details of that plan actually are.
Okay.
But yeah, they're ending the conservatorship, and by the way, they want more competition in the market as well.
Okay.
For Fannie and Freddie. So that is also typically good. Because when you have more options, that usually drives, rates down, that usually drives pricing down, things like that. So overall, things are looking really good. Now, just like something that we did not foresee, like the government shutdown, played a role in creating this great scenario right now, keep in mind that something that goes the other way could change it. So either way, now's still a great time, and take advantage of it. Don't sit around because we're expecting things are going to be like this. Because one thing I know, things that are bad don't stay that way forever, and things that are good don't stay that way forever. So when the good things happen, you just got to be able to take advantage of them and choose to take advantage of them.
Absolutely, for sure. Yeah. Now, when you say that it creates competition, like, what do you mean? Are you saying like there's going to be more like loan companies coming out or something like that, or what do you mean by more competition?
Yeah, like more like private lenders. Because once you get away from, well, let me back up. So typically when we're talking about a conventional mortgage, that means that you're underwriting that mortgage to the standard and the guideline of Fannie Mae or Freddie Mac, depending on what guidelines you're using.
Correct.
And the idea behind that is eventually the lender that helps you get that home, they're going to package those loans up and sell them back to Fannie or Freddie.
Oh, okay.
Right? So when you have other people outside of that, you're no longer just underwriting to the guidelines of Fannie and Freddie, which expands the market. So there are programs out there right now. We call them in the industry, we call them non-QM or non-qualified mortgages.
Okay.
And those are outside, Fannie and Freddie Mac guidelines. So you have more options. So you've heard me talk about someone buying a home with a 1 month bank statement.
Yes, absolutely. Yeah.
Right. That's not Fannie or Freddie.
Okay.
When we talk about someone got a new one, now you can buy a home if you're self-employed with a CPA letter.
Oh, wow.
That's not Fannie or Freddie. We were just talking about another program right now where you could get back into a home loan like 1 day to 12 months out of a bankruptcy or foreclosure.
That's great.
That's not Fannie or Freddie. None of those are Fannie or Freddie guidelines. So when you have other lenders or other investors get into the market and you're not underwriting and you're not forced to underwrite specifically to Fannie or Freddie, gives people more options and therefore drives competition.
Yeah. Well, that's good. I mean, what you mentioned about the CPA letter? Yeah.
So if you're a self-employed business owner, you can purchase a home with a letter from your CPA.
Now, when you say that, you mean like you don't need the bank statements, you don't need that kind of stuff?
It's basically it's a stated income program.
Okay.
And all they're really looking for on the CPA letter is just your CPA verifying how long you've had the business, that you are self-employed, that you're licensed or professional, whatever.
Yeah, absolutely, for sure. Yeah, wow. That's great. Yeah. Okay. Now, when's the last time interest rates were this low?
Let's see here. Probably about this time last year.
Okay.
Because remember, this time last year, rates were still pretty good, but they were heading up. And they were already coming up from where they were the year prior. So like for 2017, the effective interest rate for the year was actually only 4%.
Oh, okay.
So last year we climbed up to 4.6.
Right.
And now they're estimating back down to 4.5. And by the way, where I'm getting all this information, you can put a link in later on if you want.
Okay.
Freddie Mac has on their website is great for this information. They do, they do reports, they do forecasting reports.
Right.
They have great charts. They have, you can go on there. They have a chart where you can look at what the interest rates did for the last 30 years.
Oh, wow. That's great.
Right?
Yeah.
So they have reports. They have data. It's really very, very educational. So if you're ever wondering what's going on in the market and the forecast and things like that, FreddieMac.com is a great place. I don't think it's Freddie Mac. I have to check.
Yes.
It might be FreddieMac.org, but.
Okay. Yeah, well, we'll make sure to double check before we post a link on here.
Yeah, but that's a great place to get, unbiased information about what's going on in the industry and where we're headed.
Yeah, and I like how you said that. It's unbiased information.
Yeah.
Because, unfortunately, depending on where you actually get your information from, obviously you can be swayed different ways.
Of course.
But when you look at something like, say, FreddieMac.com or .org, but we'll definitely clarify for you guys.
Yeah.
You're actually dealing with unbiased information. They're just looking at it straight black and white. No gray area here.
Right. Because they're not trying to convince you to do anything, right?
Right, exactly.
If you leave it up to someone in our industry, they might say, hey, rates are going up next week. Do it now. Do it now. Now.
Right. But unfortunately, no one has a crystal ball, so we don't know.
And they could.
Yeah.
They could.
Well, absolutely.
Yeah.
Absolutely. They can go up, they can go down.
Yeah.
Well, we don't know. But, what are the chances of interest rates going down?
Right. And like I said, and there are so many factors that go into what's happening with interest rates and the market and whatnot.
Right.
So like I said, we did not see the government shut down. I mean, obviously there was a possibility, but we didn't know it was actually going to happen. And then once it happened, we didn't know how long it was going to go on.
Right.
You know, because a lot of people, when it initially happened, they're like, oh, they'll get it worked out in like a week. And it ended up going over a month.
Right, exactly.
You know, that started before Christmas. You know, so things like that can always take place. Unfortunately, you know, when you talk about tragedies, you know, when you talk about sometimes, you know, God made tragedies. So, you know, if a hurricane or something like that, or huge earthquake destroys, I don't know, London or something like that.
Right.
You know, things like that you can't foresee, and those can obviously have an impact on the financial markets and whatnot. So,
yeah, for sure.
Yeah.
So, I mean, with President Trump making that decision, you know, regarding Freddie Mac, Fannie Mae, what do you think the intentions were to do that?
Well, he's a real estate guy.
Okay.
You know, that's his background. So I think he thinks like most real estate people would think, which is, hey, we want more options to buy homes and we want better rates when we do it.
Right, absolutely. I mean, that totally makes sense.
Yeah.
Right?
Yep.
Yeah, for sure.
Yeah, so I'm guessing that's what, you know, and by the way, you know, just depending on your belief in your politics, you know, the conservatorship, you know, some people believe that the government should not be in control of those entities for an extended period of time.
Right.
I said after the crash in 2008, you know, there was obviously some people felt the need in the Obama administration to make sure that happened, to get us back on, get them back on track and clean up a lot of the unscrupulous behavior and decisions that were made that kind of got us into the crash. But, you know, basically what the Trump administration is saying is, hey, we're healthy now, we're back, you know, you guys should be out there dealing with your own situation and whatnot, and just focus on helping more people buy homes and giving them more options.
Absolutely. Yeah. So if you're a buyer, you know, and you're thinking, maybe I should wait, you know, till next year because the interest rates are going to go, or, you know, or if I'm ready to buy now, like, what do you think a person should be doing in this situation?
Yeah, so as I've always said, as soon as you're ready to buy, as soon as you're ready for that responsibility, unless you have some specific reason not to move forward right now, then you should. And that specific reason should never be, I'm timing the market. Right? Because just like I told you, as I was telling you all last year, okay, let's say you buy a home for a higher rate right now. The rates go down. Well, guess what? I'm now helping people that I helped buy last year. I'm helping them refinance into today's lower rates. Right? So, and they paid that higher rate for 6 months or a year, but they get to move back down to where everybody else is. So if you're ready, like I said, you should never be trying to time the market, right? Because all these forecasts and everything are great, but guess what? The same people that were forecasting you were going to be at 5%, you know, by the end of this year, you know, are the same people that are now telling you, hey, it's going to be 4.5%. And that doesn't make them bad. They're just taking the data as it comes and interpreting the data and doing the best they can with it. But some things you cannot foresee. So when things are good, take advantage of them.
True. Absolutely. When things are good, take advantage of them. I mean, that totally makes sense. And if you are qualified and you are ready to go and you are ready to accept that responsibility, you know, then homeownership could be your option. And the thing is, too, I mean, I've had clients buy a house and sell a house in less than 3 years. It happens. You know, something happens, all of a sudden you put your house on the market and you sell it. You know what I mean? So don't think that you have to be stuck in this mortgage for 30 years, because that's a lot of preconceived notions that I hear from people. It's like, well, if I don't want to buy right now because I'm going to be stuck for 30 years. No. If your life situation changes, you can always sell. And the good thing about buying in Orange County or buying in Southern California, I would say an average between 5 to 7 years you own a house, you're going to have equity built into it.
Oh, of course.
You know what I mean? So you're really not – so it really, you know, gives you that ability to actually sell your property and even get a little bit out of it. Or if you're selling less than that time, then chances are you're probably just going to be a wash, so to speak.
Right.
You know what I mean? But the good thing is about when it comes to selling a property, you can time it better. You know what I mean? As a buyer, it's really hard to time. You can't really time. But as a seller, you have somewhat of ability to time the market. Not much, but you have somewhat of ability.
Right. Well, I mean, I would just say that home prices or home values are a little easier to kind of forecast
Right.
than rates.
Mhm.
Because rates, you have so many different factors that go into it, and
Right.
it's not just a local thing, right? Because I can tell you right now, with all certainty, 10 years from now, the homes in Beverly Hills will probably be worth more than they are right now. I can say the same thing about Newport Coast,
Right.
But those particular things are not specifically dependent upon, global events and things like that, right? So it's harder to forecast rates, but the home values, it's a no-brainer. Anaheim Hills, 10 years from now, your home will probably be worth more.
Absolutely.
You know what I'm saying? Because, as a friend used to tell me, God's not making any more land.
That is true. That is true.
Lex Luthor tried to do it in that awful Superman movie, but
oh my gosh, I can't believe you just mentioned that. Oh my gosh. Was that Superman Returns?
yeah.
Oh no. Oh jeez.
Yeah. So the home market, that's different. And while you're talking about home values, because I know a lot of people still have a bad taste in their mouth about, how property values dropped in 2008 and they were stuck, not being able to get out of those mortgages and not being able to get out of those homes. Mm-hmm. But as we've talked about several times before, that was a few different things that were going on that were pretty much anomalies in the industry.
Correct.
That created that scenario. And, I think we've learned from the lesson. I think on the finance side, we definitely have learned. Mm-hmm. And there are things that we allowed to happen back then that we would not allow to happen today.
Absolutely.
Starting with not being able to call up an appraiser and say, hey, can you all make sure that this appraises for $500,000? I know every other home, is worth $400,000, but I need this one to have $500,000.
Yeah. Those days are long and gone.
Yeah.
Absolutely.
Yep. You can be sentenced to the hole for even making eye contact with an appraiser now.
At this point, you're just happy that it actually comes in a value.
Exactly. And you have no control over that. And the appraiser's not going to listen to you. They're not going to deal with it.
Right.
So, and you have to go through a lot to become an appraiser now. Mm-hmm. Actually, there's a shortage of appraisers. I just don't know that. Yeah, they're because it takes so long to get into it that they're not getting as many appraisers into the industry as they would need or as they should see. So, if you're in the industry right now, you're an appraiser. You took all that time to get there. You're not going to mess that up. So one real estate agent, will be happy that they are going to be able to close that deal.
Right, exactly. It's not worth your license.
Exactly.
Absolutely. Yeah, for sure. Yeah. Now, to give you guys a mortgage update, market update, let you know what's going on. So expected market time in all of Orange County has decreased from 84 days to 83 days. So it's still considered a slight seller's market because it's between 0 to 90 days. Between 0 and 90 days is considered a seller's market.
Right.
So we're still considered a seller's market. And these are homes that are priced below $750,000 and below. Now, for homes priced between $750,000 and $1 million, the expected market time is 66 days, which is a slight sales market. And that represents about 18% of the active inventory and 22% demand, which means that the price range between $750,000 and $1 million, we actually have more buyers looking in that price range than there are available inventory.
Right.
So if you're a seller, and your home would be priced between $750,000 and $1 million, this could be a potential great time for you to put your house on the market and net more money.
Yeah, absolutely.
Yeah. Now, for homes that are priced between $1 million and to $1.25 million, the expected market time is 85 days, which is a slight sales market because you're still within that 0 to 90 day period. Now, for luxury homes, I like how they say luxury homes start at 1.25. I mean, I'd say anything over $1 million is considered luxury. You know what I mean? But hey, Orange County, right? So for luxury homes priced between $1.25 million and $1.5 million in the past 2 weeks, expected market time is from 95 to 103 days, which means in that price range you're doing more of a balanced market. So that means that it doesn't really favor the sellers much. It doesn't really favor the buyers much. You're kind of on an even playing field at that price range. Now, homes between 1.5 million and 2 million, the expected market time has increased to 140 days to 146 days. So you're still, considered, in that balanced market there. Now, for luxury homes between 2 million and 4 million, expected market time is about 245 days to 230 days, which would be considered more of a buyer's market there. So at that point, buyers definitely have more ability to negotiate on price and terms in that price range. Anything else over $4 million expected market time is has decreased from 650 days to 562 days.
Okay.
So it'll still take you over a year to sell your property average, and still consider a buyer's market. But it has decreased at least, close to about 100 days off. So there were about 1,543 closed residential sales in February of this year. It was 15% fewer than February 2018. Because in February 2018, we closed 1,820 homes. Now, February marked a 6% increase from January 2019. So we actually saw an increase of home sales from January 2019 to February 2019. So also, in terms of homes that came on the market, the active inventory increased by 166 homes in the past 2 weeks, which is up 3%, and now totals about 6,532 homes. Last year, at the same time, we actually had 4,609 homes on the market, which was about 1,923 homes fewer than last year. So it shows that we actually have more houses on the market at this time this year, than we did last year. So that can take, obviously, based on the interest rates going and things like that. And it's still, obviously, being considered a slight seller's market. So we're still seeing a rise of inventory there. But don't get me wrong, we are, like I said, depending on your price point, you're still considered a seller's market and still have low inventory. So there's still not a lot of homes out there for buyers, depending on your price range. Unless you're over $1.5 million and up there, then, yeah, buyers definitely have more pull and ability to negotiate price. But anything below that, you're still considered a slight seller's market. So,
yeah. I kind of feel like just some of the recent experiences I've had, though, I do feel like sellers are now more open to negotiations. I mean, because before, when it was like everything was selling over a weekend, anything you ask for the seller, like, nope, not doing it. Now they're at least listening a little bit, if you're reasonable.
Absolutely.
Right? A little bit. Just a little bit.
Yeah. Well, I think just with the shakeup of what's been going on with the economy and the market, the buyers are they have started a pushback. It's like, hey, I know you want this price, but I'm not going to pay that. I'm going to offer you this. Right. And we are, like you said, we are starting to see sellers negotiate. We're starting to see sellers realize, well, let's see. Is that extra $10,000 really going to hurt me to take that? As opposed to, delaying my destination or where my family and I want to move to. So we are definitely starting to see that. What we're experiencing, we're seeing an average about 2 to 3 price reductions before we're actually seeing a property go into escrow. Right. So seeing price reductions on the market, it's become a norm. Yeah, for sure.
Yeah, so that's good. Like I said, if you're buying right now, it's good that sellers are actually trying to meet you halfway on certain things. You still can't get too ridiculous.
Absolutely.
Say, hey, I want to pay for all my clothing costs.
Yeah.
It's good.
Yeah, absolutely, for sure. Yeah, definitely. Yeah, so do you have anything else to add?
No, just as I always say, if you're ready to do something now's the time, unless you have a specific reason not to. It's a great time. Rates are great. Plenty of, there's more houses on the market and whatnot, so it's good time.
Absolutely.
Yeah.
Well, as always, we definitely appreciate you guys for tuning in. If you have any questions, obviously, my contact information will be here as well as Wesley's contact information, and we'll definitely put up that link to that website so you guys can actually look at it and, inform yourself. Because at the end of the day, you want to make sure that you are empowered to make informed decisions. And to be empowered, you have to be knowledgeable, and we want to provide you with that information so you guys can make informed decisions. Like I said, as always, we appreciate your comments, your likes, your shares. Hope you guys have a great weekend. It's not supposed to rain. I don't think it's supposed to rain this weekend.
No.
Yeah.
Overcast but no rain.
Yeah, absolutely. So go out there, enjoy yourselves, have a great time. As always, if you have any questions about buy, sell, or invest in real estate, you can always feel free to reach out to myself, reach out to Wes. Our information is going to be here. This video will be saved so you guys can replay it, share it, whatever you guys want to do with it, you guys will be able to do that. And I'm hungry, man. So I'm probably going to go in there and order at least 3 chicken tacos.
You guys have probably noticed me looking off to the side here and there because I'm looking at what people eat. I'm like, ooh, that look good. Ooh, that. Sorry about that, guys. Just distracted.
Yeah, so I'm going to go eat some lunch right now. I'm sorry, Wes. I tried to hold out as long as I could, but, yeah, I just can't do it.
I'm not mad at you, man.
All right, you guys. Have a good weekend.